Good day, everyone. This is your European Open briefing for Tuesday, August 9th. My name is Michael Florentiades. I'm the chief economist here at Excel.com. These are the key points you should know about today. The US dollar was steady despite some dovish remarks from the Fed's Powell. Sterling dropped on Bank of England's McCafferty call for more QE if the economy sours. Chinese inflation came in line with expectations. Oil and stocks have corrected from their highs. And we had earlier the National Australia Bank survey in Australia, British Retail Consortium sales, and UK industrial output to look forward to, as well as US labor costs and productivity. So pound dollar broke below the 130 mark to a 1-month low as the Bank of England's McCafferty called for more QE if there is additional economic slowdown. Now, the pound dropped despite some encouraging British Retail Consortium retail sales for July. They were up a very encouraging 1.1%. This could be to some extent weather related and a snapback from the previous month to a weak number. Euro pound climbed above the 85 pence level, which is near a near 1-month high also. So unless there is a disaster in the euro or the US dollar, these two should be able to continue to do well versus the pound. We shall see, of course, about that. On to the dollar. The dollar, as we said, is doing okay, nothing too exciting. Fed's Powell seemed to want to dampen expectations for a rate hike, so for the market to calm down regarding the Fed's rate hike prospects. Otherwise, I think that foreign exchange trading and particularly dollar trading is giving the impression of summer doldrums, slow trading in thin market conditions. We are expecting retail sales data out of the US on Friday. That's the next week number for the US dollar. Currently, the markets are pricing in a 50% chance of a rate hike by December. So that could make one wonder how high can the US dollar go on speculation about a single quarter point hike 4 months from now. Probably not much. So this dollar rally is we need more for the dollar to rally strongly rather than just speculating whether or not, like a 50-50 chance of having a single quarter point hike in December. But as you can see, 1.1075 versus the euro and 102.5 or more or less versus the Japanese yen. Now, oil tried to rally above $43 a barrel but failed. There is talk about an OPEC output freeze, but this is highly speculative to talk about such a possibility given all the OPEC infighting at the moment. There are some very bearish scenarios out there for oil as long as Saudi Arabia, Iran, and Russia keep pumping at full capacity. Yes, US shale oil production is also a consideration, but it's not as important according to some analysts. So just to give you an alternative, I mean, some people are saying the price of oil is too low, but if there is so much supply out there and demand is insufficient, price could even head lower. So that's just something for you to think about. We also had inflation figures out of China. They came in at 1.8%. This is less than the 2% expected. This is for July, speaking for about July. This leaves scope for more stimulus from the People's Bank of China. Of course, we have to watch what is happening to the yuan. The yuan did not react much to the figures at 6.66. So more or less stable situation there with the Chinese yuan and inflation coming in as expected. We'll talk in a minute about producer prices. So we said already in today's calendar we had the UK's British Retail Consortium 1.1% month on month, year on year rise rather than minus 0.50% the previous month in June. So we also had a beat on producer prices in China. They came in at minus 1.7% year on year versus 2% expected. National Australia Bank Business Survey in Australia, we had a drop in both conditions and confidence, and we are expecting UK industrial output at 0.1% month on month, 1.6% year on year, and of course the UK trade balance. Later on, we will have labor costs and productivity. We have a 1.8% read for labor cost, 0.4% read for productivity, although we are talking about Q2 numbers, so some may say this is ancient history. Also with some delay wholesale inventory and sales for June. Then after the market close, later on later on tonight we will get API weekly crude stocks, and tomorrow we get Japanese machinery orders. These are key indicators for Japanese industry to look for. So that's all from me today. Thank you very much for watching and have a great day.